Okay.
Yeah. Okay, then let's start, guys.
Yeah, let's start. Yeah, sure.
Okay.
Vimesh bhai.
Yes.
I just want to say one thing. Okay, I think you have done a lot of research and you have prepared a very extensive thing. I just want to FYI for everyone. So whatever indicators and oscillators, moving averages, whatever other technical things we see, right? Everything is derived out of candlesticks and volume. So this is like the foundation. So we need to have a very clear and very good understanding of candlesticks and volume. If you master that, rest of the things you can make out. You don't need to look and you can make out. So now MACD will look like this at this stage or something else. You'll be able to predict because everything else is derived from this. Okay, so pay attention and try to learn, and on your own time also see if you can go back and refresh and read on your own and master it. Okay. Okay, that's it. Go ahead, Dinesh.
Okay. Good morning, gentlemen. Welcome on board. Let's start with the candlestick patterns. To start with, I will cover. You will learn in this session mainly the history of candlestick patterns, structure of candlestick pattern, candlestick on different time frames, and different candlesticks patterns. So moving on to history, first of all, what is a candlestick pattern? Candlestick pattern is a method of reading price chart used by many technical analysis. As Bond said, the analysts use this as a basis, a foundation. So this is a method of reading the price chart. So moving to history, this candlestick pattern originated from Japanese rice trader called Muneisa Homa during the 1700s. So after almost 300 years, it was introduced to the Western world by Steve Nissen, and in his famous book, Japanese Candlestick Charting Techniques. After that, original idea, after that, now likely the original ideas have been modified, which now results in the candlestick patterns which we use today. Basically, the history, all these candlestick patterns are derived from the Japanese. So even all the names are almost Japanese names and with their own meanings. Okay. Then okay. So usually the structure of candlestick pattern. If you see any candlestick, it gives the mainly 4 components. So one, the opening price, high, the highest price or a fixed time period, low, the lowest price or a fixed time period, and close, the closing price. So that is the structure of the candlestick pattern. So if you can see here, I think all you can see,
can you make it full screen slideshow?
Okay, no problem.
Okay, sorry.
No worries.
Yeah.
Now it's clear?
Yeah, it's very clear.
Yes.
Okay. So if you see, as I mentioned, each candlesticks have the 4 main components. Okay. If you see here, if it is a green candle, means it's always bullish. What does it mean? In bullish, if you see the open price and the close price, always the close price will be higher than the open price. If you see in this direction, so open, then at the end of the session means here I can refer to the different time frame. It may be based on 1 day, 1 hour, 1 week, or 1 month. Suppose example, on the day it opens maybe some 100, any extra 100, and it closes by 105. And in between the day, it may move to maybe 110, and on the lower side, it may be moved to 96 something. So if you see this is the bullish candle. So next, moving on to the other side is the bearish candle. So bearish candle means always the open price is higher and at end of the day, it's closed below the opening price. If you see the direction, it's a downward direction. and it is other side also the same, high and low. So this is the basic structure of all the candlesticks, irrespective of the time frame, whatever the time frame you take, either minutes or 5 minutes or hourly basis. This is a basic structure. So it gives 4 key components. Hope you understand.
Yeah. Vimesh, one question.
Yeah.
Yeah, sometimes when we are seeing the live charts or trends going on, there are some, you showed there are upper shadows and lower shadows. Okay.
Yes. Yeah.
There are tails basically.
Yes, I am coming to that session. So we go on. We have different type of candlesticks, and also have their own meaning. So we
that
move.
Is, so it is there in the subsequent.
Yes, slides. Yeah, exactly. Yes. Okay.
Okay. Thank you.
Okay. And next, we saw the main components. Now, I would like to say 3 main things to know about the candlesticks. Candlesticks has mainly the body. The body means you can see this is the body where the open and close price. That is the body. And we'll have the shadow. Shadow means the small wick above the closing price as below the opening price, means the low price. So that is the shadow. And also one should know the size of the body relative to the wick. Like here in this candle, if you see, the size of the body is more higher than the size of the wick. And other case, if you see, the wick size is here more higher, maybe 2 to 3 times the size of the body. So this will give some basic idea who is in control, whether the buyers in control or sellers in control. So example, the body tells us who is in control, whether the buyers or sellers. So example, in this case, if you see, it started opening at this price, and at some point of time, the buyers come in picture, like they go on buying, and at one stage it reached high. So after reaching high, again sellers came into picture. Hey guys, okay, now it's enough. I want to move back to the price. I want to come in the picture. So then they came and they tried to push little bit. But here, if you see, the size is very less. So this overall, it says totally the buyers are in strong position. Correct?
Yeah.
So, and in this case, if you see, so here it opened, and one point of time it reached all the way high here. Then later the strong price rejection from the seller side, like, okay, they moved all the way down here. So this shows like almost sellers are in control. But on the overall day, anyway, it's a green candle, still buyers. But strong rejection means it's giving some indication for the next pattern. So next pattern is a matters. Okay. And same goes like here. If you see, there are different shapes and size. So in this example, like if you see here, the small wicks, longer body. So and here small wicks, small body, and here the small body and long wick. So there are different patterns, and subsequently we have what is the name of each pattern. Maybe this is just an overview, and next subsequent slides we have different types of patterns. So you should understand basically these three are the main things. What is the significance of the body? What is the significance of the wick? And size of the body relative to the wick. Okay? Yeah. Any questions till now? Okay, moving on to the next. In the candlestick chart, candles can be classified as bullish or bearish candle. So usually the bullish candles represented by blue, green, and or white, and bearish represented by red or black candles. So usually majority of the analysts, whatever, they use blue and green and red. So I personally use green and red. So if you see any in the chart, if you see the green means it's always bullish, and if you see any red candle, it's a bearish, and it is up based on your own trading platform. Maybe some Zerodha, I think they use the blue and red, and maybe Sharekhan I use that use the green and red. So it depends on your own app or platform. Okay, and the one thing you always remember, for bullish candle, the open is always below the close that you saw in the previous slide. And for bearish candle, the open is always above the close. Okay.
Yes.
Okay. Next, moving on. I think till now, any questions? Okay. I move on to next slide. Next slide, just it's on candlesticks on different time frames. I think many of you guys are aware who are in this session. Each individual, based on the trading patterns, they use some chart, like time duration during which one prefers to study a particular chart. Some popular time frames used by technical analysts are monthly charts. If you are a long-term investor, maybe they will try to look for the monthly basis, monthly chart. So if you're investing for maybe 3 years or 4 years, and it depends on each individual, they monthly charts. And if some are like swing traders who wants to invest in like base of 2-3 months, then they will see the weekly charts. And daily charts, some wants to like trade for some intraday, also they will see the daily charts and as well as hourly charts. And intraday charts also, like who want to trade for intraday, they will basically see the 30 minutes and 15 minutes and 5 minutes. So one can customize the time frame as per the requirement. So it's all there based on their trading plan and trading strategies. They can change. Okay. Now, what are exactly the candlestick patterns, the significance? What does it really gives us a message? The candlesticks are used to identify the trading patterns. Hope you know, like it used to identify the trading patterns, whether it is an uptrend or downtrend, or stagnant or indecision. So it's to give you the trading patterns. Patterns, the technical analyst to set up a trade in combination with other tools such as MACD, RSI. So this is the main as just now Raghavendra mentioned. So patterns are the key things, the foundation. First, any specialist or experts, first they will see the candles and they will try to say, okay, now the market will go this side, uptrend, downtrend. But again, sometimes they also use in combination with other oscillators, and it just as a double confirmation, some sort of thing. So MACD, RSI, etc. So candlesticks gives an insight into both entry and stop loss price. So maybe in subsequent sections, maybe some when I show with example, maybe you understand some candlesticks patterns guide you to set the stop loss, and also they decide to entry and exit prices. Okay.
Malaysia से class ले रहा है Malaysia में.
So candlesticks are broadly divided into single candlestick pattern and multiple candlestick patterns. So basically, candlestick patterns are broadly divided as single as well as multiple. So in this session, actually, it requires more time to cover all the things. So I think in this session, I am more focused on the single candlestick pattern.
Okay.
Okay.
Yes,
okay.
Yes, Dinesh.
Okay. What is a single candlestick pattern? A single candlestick pattern is formed by just one candle. So it's just one candle. It may be, again, as I mentioned previously, it depends on the session, whether you are looking for 1 minute session, 5 minute session, or 1 hour session. So if any one candle, you say like it's a one candle for that particular time frame. Okay. The trading signal is generated based on 1 day's trading section. So just here I use as 1 day, but it can be hourly, daily, weekly, or monthly. If you see in any candlestick in your app, then you can say like it's maybe based on what you set. Okay, the trades based on a single candlestick pattern are extremely profitable, provided the pattern as identified and executed correctly. This is the catch here. So basically, it should be identified and executed clearly. Then definitely there is a chances of high probability trading setup. Okay. Then pay attention to the length of the candle. So always the length of the candle, that means the body of the candle. The length signifies the range of for the day or respective time frame. In general, the longer the candle, the more intense is the buying or selling activity. So if you see, if longer the bullish, then there is more intense of buying. And if you see the longer the bearish red candle, that means there is a lot of selling activity. The sellers are in control. So if the candles are short, so in subsequent slides, you can see what is a short mean. So if candles are short, then it can be concluded that the trading activity was subdued, and try to avoid trading based on the subdued short candles. So this is a key message. So whenever you see in anything, if candles are very short and with small body and other things, that means you try to avoid the trading. Maybe because after that it may go market may go in either direction. It is up or down. So it is advised to stay and watch till what is the next pattern it's going to form. Okay, we will understand this perspective as and when we learn about specific patterns. Okay.
Candlestick patterns, what we see, say for example in trade view, right?
Trade view or whatever. What is your which one you are using?
No, my question is when we look into the trade view, say, is it updated or live, or how is it?
I think trade view, my personal view, all the other than what you are using your own trading broker, other external are delay of 5 to 10 minutes.
No, I'm not using anything now. I'm like a fresher, but I just wanted to know if the candlesticks, what is shown in the trade
So
view,
let me
lively
go back.
updated.
Maybe I will show you one example. Maybe if you have this one. So usually this is on normal basis I use like investing.com. Okay. Or there are so many websites you can use, investing.com, tradingview.com, and also sometimes I use my own ShareCoin. But can you see here the screen?
Yes.
No.
You have exited the slide mode. Only I can see
Okay,
the
sorry.
slide.
Okay,
think
then
you have to
I need to share. Okay,
unshare and share again.
Yeah, just 1 second.
Hope I am not interrupting so much.
No problem. Can you see now, Papa?
Yeah, I can see that.
So this is how, okay, just to take few minutes to explain on the website how it looks like. Okay, so you can see usually I use investing.com. Okay, so investing.com, you can go and search in any stock. Maybe just give me a minute. I will go from start if others don't mind, just to explain in just 1 minute. Okay.
Okay.
So basically investing.com, if you search any stock, for example, Tata Motors. So usually it will give, and it will give in this view, and you should click here the technical chart. And once you give a technical chart, then you can see here you can maximize full screen. Then here you have candles. Now it is in a trend. Trend is based on the line and points. So you can as a candles. Okay. Can you see now? So
yeah, it is visible.
Yes,
yeah, visible, right? Okay.
Yeah.
Here you can see based on your trading pattern, you can set like here you can see 1 minute, 5 minutes, 15 minutes, 30 minutes, an hour, 1 hour, 2 hour, 4 hour, 5 hour, 1 day, 1 week. So it depends on which pattern, like which you say, suppose example 1 day. So if you click 1 day, then you can see the candles. Okay. Now, and you can see example one candle. If you put your cursor here, and it will display here the prices: open, high, low,
Low.
close. So example, I place cursor here now. This particular Tata Motor is open on the day on 5th June. So open price is 145, and high price it went up to 112, and low 99, and closed at 110. Okay, this is the basic. So yeah.
So this is basically for a day.
Yes. So each candle now, because I filter here and day. So
Yeah,
whatever.
what day? So overall for a day picture it is showing.
Yeah. Now if you want to change for weekly, now in this case each candle represents that week.
Week, exactly. Okay.
Yeah.
So for that week would be a bearish, or that week would be a bullish.
Yeah. So particularly, suppose example, this week the opening the starting of the week means Monday morning it opened at 65.90, and the closing is the Friday closing, Friday end of the day business hour, then closing price. So it is a weekly candle. So
weekly candle. Okay.
Yeah, in between it went high 93.75, low 74. So it is on which time frame you select. So it can be any. So based on some intraday traders usually set up 30 minutes and 15 minutes. So if you want to have a trader, so you should observe based on like 30 minutes, 15 minutes or 5 minutes. And if you are a long-term investor, then monthly basis. So in a year you will have 12 candles. Correct. Each month will have candles.
Exactly, 12 candles.
So it is like that. If you see from here, if you click bottom, it will show the which month and which month. So this particular candle is of April 2019. So if you move, then if you show it's a May 2019. Okay.
Okay. Thank you.
Clear now?
This is free, Bhimeshanu? Investing.
This is free. Trading View also free, and this investing.com also free. And if you have any like your own sharing trading platform, I personally
that is also
share.
Yes, Zerodha and Sharecon, all are free.
Yeah, all of.
And in this, to add on, maybe you can also select here the indicators. So just to indicators, usually many of that analyzed use is mainly the two of the key, and rest anyway. Next section, like I think Sujay is going to cover what are the main indicators. These are the two. So now with the candlestick and with these two, then you can just set up your trading plan. Okay.
Okay.
Okay. Now shall I move to the main slide, please?
Yeah.
Clear?
Yes, Bhimeshanu. Thanks. Hello.
Yeah, just.
Bhimeshanu, just one more thing. Yeah, as I asked now, this while we see this investing.com, say on the same day when we are trading, so it will get lively updated, or how is it?
No. That's why I personally told on the web-based we'll have a delay of 5 to 10 minutes minimum.
Okay, fine.
Because these are not really your brokers trading. So your own will have live, like Sharecon and Zerodha will have live. Even some depends on that. They also will have some lag actually.
Yes, but few seconds is what I know. Okay, at least Trading View is kind of live, but not exactly live. There will be a 30 seconds or less than a minute lag could be there.
Okay. Fine.
But as far as I know, it will tell you if there is a lag. No, in Trading View it will tell you. It is not a live feed. It will put a warning so that you don't take any trading decisions based on that.
Based on this.
Based on this. But for some stocks, it will be live. So if there is no warning, that means it is live. You can compare with other things. Okay.
Okay,
Oh,
fine.
trading
Thanks.
view. Okay, I didn't know bond. Trading view is good. We actually investing. I use it will have 5 to 10 minutes delay actually.
No. Trading view is kind of live. Only for certain stocks it will not be live.
Yeah.
So that will be
Actually,
displayed. Okay.
this
It will
one
display a
actually
warning kind of thing. Yeah.
Mhm. Okay.
this one actually investing.com I use for Malaysian stocks actually, because Malaysian what I have the sharing the trading platform will not give exactly the immediate. It will have delay.
So how is Malaysian market?
So Malaysian market is good actually. It was
Good.
from last few weeks. It is good actually.
Okay.
Okay. Now moving
Yeah.
back to main slides again. I don't know where I missed it.
Every market will be good. We have to make wise decisions.
Yeah, definitely. We
Can
should be
you?
smart enough to deal with the markets.
Yeah.
Correct. Market we
And
can't say good or bad.
Yeah,
now,
we
and
should
another
be
thing is,
smart. Yeah,
when market starts to fall, no, we kind of exit our positions and stay away from market. Actually, there are people who make big money when the market starts to fall. Okay.
exactly.
So,
Okay.
Actually, I just wanted to share you in between. I am interrupting. Sorry, Bimesh, I'm interrupting
No,
in
no,
between your
no,
conversation.
no, no.
I for last two sessions, I started doing real trading. Okay, and I will share
Okay.
my experience. Okay, on Thursday the market was very indefinite. How it moved, we do not know. But in that,
Yeah.
I invested some money, and I directly jumped into option trading. Okay, and I made a small profit, only small profit of 40 rupees. Okay.
Uh,
And on Friday also, I made a profit of 190 rupees with a very
okay.
low margin. Invested just 29,000 rupees as a margin money, and I made a profit of on both the consecutive sessions, which has brought my confidence level bit higher.
that's good. That's good. As long as you mail, even money does not matter. Even 10 cents also,
Yeah,
profit is the
uh,
profit. At the end of the
profit.
day,
Yeah, exactly.
profit. Yeah.
So at least my confidence boost up in the way that I have not lost it when initiating the market and why when we actually I did the trading on the market. So I just wanted to share. So I shared all of you.
No. It's good. Good. Thanks. Bye.
Thanks.
Okay. Let's move on. Can you see
Yeah,
the?
yeah.
Yeah.
Yeah, slides you can see.
Yes.
Okay. So as I explained, okay, now let's move on to the main single. This is the key areas like main patterns which you should aware of. I think when you go through this and end of the slide and later if you, I personally recommend to, I don't know about others, but I felt when I preparing these slides, I went through the lessons. Zerodha lessons good. Please kindly you spend a time to go through each line by line and print it and underline and maybe read repeatedly. Then it will give some basics of these patterns. And I'm confident like you guys, once you read and go through and study some charts, definitely you will feel yourself confident. Oh, so these are the area where I could have entered. These are the area where I could have exit. So you will get some sort of basic idea. Okay.
Exactly.
Okay. So as I told, as I mentioned previously, the candlesticks are basically broadly divided into single candlesticks and multiple candlestick patterns. So in this session, like I will go through only single candlestick patterns. And if time permits, maybe next week or after in consequent week, maybe I will move to the multiple candlestick patterns. Okay. Okay, the first one is Marubozu. Marubozu is basically in Japanese means just in this slide. Just don't go next slides. We'll have details of each. Just this is the introduction. So Marubozu means the board in Japanese. So basically Marubozu is divided again into bullish Marubozu and bearish Marubozu. And second one is the spinning tops. And third one is doji, and fourth one basically paper umbrella, but many people call like a hammer or hanging man. And the fifth one is the shooting star. Okay, so now let's move on to Marubozu. how exactly Marubozu looks like. So if you see here the candles, you can clearly see there is no the wicks, only the body. There is no shadow or no wick. It's only the body. So no, that means the open price and low price are same, and the closing price and high price are the same in case of bullish. Okay, and the bearish is other way. So the candlestick with no upper and lower shadow, they appearing bold. You understand what is Marubozu? Basically you don't have, but if you in reality if you have this one small thing, that is also considered as Marubozu. I think someone has to mute, please. Okay, so the green candle represents the bullish Marubozu and the red candle represents the bearish Marubozu.
Okay, those who are not speaking, can you mute?
So as I said, bullish Marubozu example, this one, you can see open price is equal to low.
Still there
So
is
open and low.
That is what. No,
noise
hey,
on the line.
Sujay, see if you have control. See if you can mute others.
No, actually, I'm not able to mute it.
I think organizers should be able to mute all.
Yes,
No,
but
that's
I'm
what.
not.
Okay.
It's only muting me.
Maybe Avinash.
Okay, so as I said, bullish Marubozu is open price is same as also same as low, and the closing price is the same as high. You can see here this how it look like in the patterns. Open equal to low and high equal to close. What exactly it gives? Okay, significance of this. A bullish Marubozu indicates that there is so much buying interest in the stock that the market participants willing to buy the stock at every price point during the day. So much so that the stock closed near its high point for the day. If you see, it opened, then it keep on going. So that means at every point the buyers come into picture, they want to buy, and never they let it go down. So it keep on buying, and at the end of the day or end of the session, it's a high also same as a closing. So that is called green Marubozu. And in reality, even small, there will be small shadow, but if it is there is some percentage, if it is within that, still it is considered as a green Marubozu. And you can see how much percentage you can while reading in Jiroda the lessons, you will know even small wick on either side, still it is considered as a Marubozu. Okay.
So it will be very minute number of people selling.
Yes. Okay. So, but in reality, once you look long body with an open price is almost same as a low and closing price is almost same as high, then it's a bullish Marubozu. And what exactly it's and actually the Marubozu is one trend. If you go in the candlesticks, all other patterns will rely on the previous trend. Means based on some previous trend, then it has its own significance. But Marubozu will really have no significance with respect to the previous trend. It does not matter previous trend, whatever bullish, bearish. If you see like this, then there is a high probability that if it is a green, then next trading session may go to bullish. High probability. But at the time, again, as a good trader, the stop loss comes into a picture. Okay. Now, it does not matter what the prior trend has been. The action on the Marubozu day suggests that the sentiments have changed and the stock is now bullish. That's what just now I mentioned. It really does not matter on the previous trend. If new candle or new session candle is a Marubozu, that means if it is a bullish, the most likely the bullish is going to continue. Most likely. Okay. The expectation is that with this sudden change in sentiment, there is a surge of bullishness and this bullish sentiment will continue over the next few trading sessions. That's what, as I mentioned. So it may continue for next trading sessions. Hence, a trader should look at buying opportunities with the occurrence of bullish Marubozu. The buy price should be around the closing price of the Marubozu. So example, I tell you, so if you see, if you want to trade and like, okay, if you see some Marubozu candle on one day, example, today morning it opened and the low price is same, and the end of the day, like market closing day, like 3:30 or 3:20, whatever Indian time, if you see the high price and closing price are the same, then it's like a bullish Marubozu. Then if you are a trader with some risk, this one you can try to go buying the opportunities, but you should play the you should place the stop loss. If you place, suppose in next day, if comes suddenly, if market also down or some other factors is try to come down, then at least if you set a stop loss, then okay, you risk you are reducing the losses. But if it is again, if it is in favor of your this one, then it may rally. Okay, that's how the significance. If you see any the bullish for hourly or daily or whatever, you try to grab an opportunity with some certain setting the stop loss, then maybe you can win a trade. Okay, so clear guys, up to here.
Yes, yes, Bhuvnesh.
And maybe later I will just flip back to, okay, I will flip back to the others. Maybe I can show some Jiroda how they explain. Just give me a minute. Once I show the trade, then maybe trend you will understand.
When we say trading session, it
Yeah.
could be say 1 minute, 15 minutes, or whatever, right?
Yeah, it depends on what is your trading plan.
Okay.
So trading plan, because you trading plan, maybe it's based on the weekly basis or hour for intraday. It has to be clearly defined when you before enter into the stock. Before clearly define whether you are entering the stock, you are buying or selling the stock based on what, like you are a intraday trader or weekly or swing or long term. That is what the session. Okay.
Yes,
Yes, sir.
Dinesh bhai, just I want to explain to the Pampa. See,
Yeah.
if you are a long-term investor, you don't need to look at 5-minute, 15-minute, or 1-hour candles. You just need to look at weekly and daily candles, and that will suffice. Okay, because you have time on your side, and you just want to determine the trend, which way it is going, and you just want to choose the right place of entry and go along. Okay. Okay, that is for a long term. There could be people who just want to buy today and sell it within a week or 2 weeks. Those are called as short term guys. So those people will look at the 1-hour chart, 1-day chart, and things like that. Okay, but if there are some other category who are like day traders, they will prepare for tomorrow by looking at today's activity and see some good entry points or things like that, and have a plan. Once that works out as the way they expected, then they will take an entry. Once they have entered, they will be looking at 15-minute and 5-minute and even 1-minute candles. Okay, so depends on what is your objective and what you want to do with it.
Okay.
Okay.
Thanks, sir. Thanks.
Okay, now can you see this Jiroda one now? Can you see the trend? The
Yeah.
Okay.
Yeah.
Here is an example of bullish Marubozu. You can see here it's like almost like low. I also said like small big below is does not matter. Sometimes it depends on small percentage, but this particular candle represents that particular day is a bullish Marubozu. You can see the open, okay, and low is almost same, and when it closes at the end of the day, so it is the high and close are the same. So if really some investor want to enter, so they can enter here and with stop loss somewhere. Usually they set at the bottom lower price of this Marubozu as a stop loss. So if it is in favor of you, then you can see the rally. It will go. Okay. and your stop loss should be somewhere down. And some investors like who do want to invest on that, because when you see if you buy at the end of the day, then you can gain the next day the price difference. But some investor, what they will do, they will try to study maybe the next day pattern. Next day pattern is somewhat again bullish, then they will enter. But entering here is a bit risk, because your stop loss will be very long. Okay,
Uh,
this is bullish Marubozu.
Just one question.
Yeah.
So when I am placing an order, say I do some research now, and for tomorrow I want to initiate one buy of one stock. Okay. So when I initiate today, say now the stock price as I'm seeing now could be, say for example, 550 rupees, and I put a threshold like if it is not below 548, I'm going to buy. So if it is below 548, then I'm not going to buy. Sorry, high. So if it is 550 now, so I'm putting, say, some additional 3 rupees as a one stock price. Say at 543 max, I can buy. I can afford to buy one stock. Okay, maximum 543 I can offer, not more than that. So when I place order today for, say, some 10 stocks, so tomorrow if it is, say, matching my requirement, then the uh, order is going to be uh,
Hey, Avinash,
Avinash bhai, can
Avinash,
you
are you there?
mute, please? Okay. So how this will be decided next day? Like when it will be? I mean, when the stocks will be allotted to me on. Uh, so how I am going to get to know that I'll be allotted in this price range or something like that.
Simple, Pampa. So, say, just for ease of example sake, assume there is a XYZ stock trading at 100 rupees, and you want to buy at, say, 95. Okay, whenever it comes to 95, you want to buy. What you will do is you will set a limit order. Limit order will be there in your trading account, and it will be in wait and watch mode. It will be monitoring the current market price. Whenever the current market price comes to 95, your order will get executed. Okay, that is called limit price.
Mhm.
So that is how you can. Once your order gets executed, it will take 2 days to get the shares into your demat account. Order will be executed, but it
Mhm.
takes a settlement cycle of 2 trading days. After 2 days, those shares will come into your account.
Mhm.
If you see
Did
order
I answer?
Okay.
history, if you see order history, that will show you at what price it has been traded. I mean,
Executed.
executed. Yes,
Executed. Yeah.
yes.
And one more thing, so when I am buying, there should be somebody to sell, right?
Hmm.
So if I place, say 1,000 stocks to buy, uh,
Hmm.
I'm not sure if one guy is there. I mean, just a weird example, okay? So I'm not sure if one guy is there who can sell all these 1,000 stocks. So
Okay.
is there any chance that it will also be split, say 500, 500
Yes.
or something
Yes.
like that?
No. No.
Yes,
No.
yes.
Wait. Okay. Good question. What happens is, if you have set there are two buy order you can set. You can set a limit buy order, or what do you say, market buy order. Okay. If you set a limit buy order, if you say you want to buy 1,000 shares of XYZ stock at 95, okay, it will just go, and when the market comes 95, it will see how many shares are available to be bought. Okay. Assume there are only 600 shares available at the 95 price. It will buy 600, another 400, it will be waiting. Suppose
Oh,
price goes up or goes below, it won't buy. It won't even buy at 94, or it won't buy at 96. It will wait.
okay.
Okay. Suppose during the day, if again that price comes to 95, and if some additional 400 are available, it will take. And for you, it is just a one order. Okay. For you, it is just
Okay.
one order. But there is a possibility that you may not get all 1,000
Okay.
if you just go with limit order.
Mhm.
But if you want to buy 1,000 without missing, suppose there is a big rally going on and you don't want to miss, right? Or if it is
Mhm.
falling down, you just want to exit, you will set 2 limit orders. market order.
Okay.
Market order means if you're buying at the best price around 95. Okay. So it will try to buy some first 500, 600 at 95, and then if it falls further, it will buy remaining 400 at 94. If it goes up, it will buy remaining 400 at 96 or whatever variable price. But you have the assurity that you will get your 1,000 shares with a slight deviation. And this is only applicable if you trade in big stocks, not in penny stocks or some junk companies. Because they,
Nifty 50 at least will have
that
this.
is what I'm saying. That is what I'm saying. If you are trading in some unknown companies, there will be gap. There, because there will be one guy selling at 95, another guy selling at 85. Okay. So then there will be the huge spread will be there, which we don't want. Okay. Did I answer your question?
Yeah, I got it. I have seen this limit price, but I have not seen this market price. Maybe.
No, it is there. You just go and read about it. Okay.
Usually market price will be
Why?
market price will be by default actually. For the first time,
Okay.
market price will be by default. So
I do it through say demat. I have seen the limit price, but market price.
No. Default will be market. So default will be market, because if you just say buy me, if you don't select limit, it is taken as market.
Maybe Pampa, after this session, like you can call me or Bond, and you can show your. If you say this one, we can able to explain you. If you share your screen, I think it will give some clear. If you are a beginner, even I also struggled the same thing when I was a beginner.
Okay.
At least when you open your account, just you can you can take any one stock, then you can see how. Anyway, it will not going to exit during off trade hours.
Yeah.
Okay. And I think you have to make one session just for the order types. Okay.
Yes. Yeah, that's true. That's true. Maybe
Yes. Okay.
Maybe one. Bond.
One quick question. I just need to drop in the next couple of minutes. Okay.
Okay.
Okay. I have some other meetings.
Okay. Thanks, Bond.
Bye.
Okay. Bye. Okay. So shall we continue with next move on?
Yeah, sure.
So I think you know, just now I tried to explain the bullish Marubozu, and the opposite is the bearish Marubozu. So if you see, so the bearish Marubozu is the same. Open price is the high. It opened with the same price high, and it dropped down. At the end of the day or end of the session, closed. So low price is the same as a close price. So open price is equal to high price, and closing price is equal to lower price. That is bearish Marubozu. Open equal to high and close equal to low. So what does exactly it indicates? A bearish Marubozu indicates that there is, you can clearly see there is so much selling pressure. So much selling pressure that stock keep on coming down, and it closed as low as same as the low. So market participant actually sold at every price point during the day or during the session. So much so that the stock closed near its low point of the day. So whenever I see your day, you can make it to just I am using this session for the day. You can convert based on your trading pattern, week or hourly, whatever. Okay. It does not matter what the prior trend has been. The action on the Marubozu day suggests that the sentiment has changed and the stock now is bearish. The expectation is that this sudden change in sentiment will be a carry forward over the next few trading sessions, and hence one should look at shorting opportunities. Shorting opportunities, you try to, if you have some, you can try to sell. If you have any stocks on buy, the sell price should be around the closing price of the Marubozu. Okay, clear, guys?
Yes, sir.
Okay, now maybe 1 second. So this is next spinning tops. So what exactly? If you see the right hand image, I think you are clearly visible. You can see the body. Previously, I told you should always try to see the size of the body relative to the wick. that gives some meaning. So in this case, if you see the size of the body relative to the wick is very long, okay, and the body size is very small. In this case, if body size is X, maybe the wick size may be 2X or 3X, 2 times. So if body size is relatively, okay, so what does spinning top? Spinning top as a small real body. So small real body, either an open price and closed price are quite close to each other. So that means the open and closed price are almost close. Maybe if it opens at today at 100, maybe it may be 102 or 103, some sort of, just an example. Okay, the upper and lower shadows are almost equal in length. So if you see any in the trading patterns, candlestick pattern, if you see this body is small and the wick is very like 2 times, 3 times, and ideally, I say ideally means it's in a, so it will have same shadow, upper shadow and lower shadow length will be almost same. Okay, upper shadow tells us that, see now what exactly the upper shadow says. If you see, it opened at one point of the day, it went, buyers came in picture and it moved the price top of this price almost high. Then later, then the sellers came in picture. Hey guys, enough. Now it's my turn to move down. So the sellers came in the picture again, moved down. You can see, so there was upper shadow tells us that the bulls did attempt to take the market higher, but were unsuccessful. Correct or not? So the buyers tried to push it up, but they could not maintain it. If it really no sellers came in picture, then ideally the price would have been closed here. Then at the time, definitely bulls were successful. But if you see in this case, it tried to went all the way up, but sellers came and pushed back. So that means this shows like bullers were unsuccessful. Correct or not? Okay. What does the lower shadow tells? So lower shadow tells, see, suppose lower, that's now the price, sellers came into picture, they brought down the price to so down. Okay, they brought down, and at some point again the buyers came in pictures. So after they reached there, then buyers came in picture and moved strong all the way up here. So that means lower shadow shows like, okay, in case of bullish, okay, so yeah, it shows like, in case of bullish or bearish, the lower shadow clearly gives the same message. So again here buyers in control, they push back from all the low to at least up to here open price or close. Then if it is closed, so up to here they push it back. Right? Lower shadow tells us that the BS did attempt, they tried to push down but were unsuccessful. So what does spinning tops? If you see such a pattern in your pattern, you can say it is like a sort of indecision, means no much decision. The buyers also try to push, and bears also are in control. Okay, so you can see spinning top conveys indecision in the market with both bulls and bears being in equal control. Correct or not? So this side, here the bears in control, and downside the bullish in control. Okay. So where exactly, like suppose it's spinning top, maybe it appears if it is in the uptrend. What exactly mean the uptrend means? Okay. So what exactly? Spinning top at the top end of the rally. So if it is a spinning top at the top end, means when there is in the market it is uptrend, and after certain time during the uptrend, if you see any spinning top, what exactly it gives? Spinning top at the top end of the rally indicates that either the bulls are taking a pause before they can resume the uptrend further, or the bears are preparing to break the trend. In either case, the trader's has to be cautious. If the trader's intent is to buy, is better of buying markets to move in its direction. Maybe I will explain here. Okay. So, suppose now you can see here you can see the spinning top. You can see the blue. Here's a spinning top. So when suppose the market is in uptrend, you can see from here it's all the way uptrend, and now this is the spinning top here. So what usually is a spinning top at the top of the trend? Here anything can happen. Here maybe the bullish may try to buy more because now it is indecision, and next candle, next couple of candles, it may give. Maybe it may go further high, or if bearish in control, it will try to come down. So if ideally the good investor, what you do if you want to trade, then you will try to buy half a quantity here, and you will see next couple of patterns, and if it is goes in his favor, you will buy few more, or else you will put some stop loss somewhere here, previous some candles, and exit. And the same goes to the reverse. When spinning top at the bottom end of the rally, means it's when already it's some stock or something is already in the downtrend, and it has reached to some peak bottom, and if you see any spinning top at the bottom, then there is a good chance. The what really indicates there here, either the bears are taking a pause, bears are taking a pause before they can resume the downtrend further, or the bulls are preparing to break the trend and take the markets higher. Either case, the trader